Well, welcome back, everyone. Another exciting day in markets. Let's start from the top. The S&P 500, the E-minis remain in that long-term uptrend channel in the uppermost quadrant of that four-quadrant channel. This is the performer plunge area. Let's zoom into the hard right edge over there. Here's the S&P E-minis. That's Friday's move on the 19th in shortened futures trade. We had a little dip, a reversal back up, closed slightly weaker than the official last day of last week, which was Thursday. Where do we find ourselves right now? Well, we are certainly down versus where light futures trade ended on Friday, about 0.5% at this stage. We've been up as high and in this area of resistance where you see the gray bars over here, which is volume profile histogram resistance. We got into a little inflection zone, got batted back down. Did some long side trading earlier in the morning. Was able to get some short side trading off as well. Was able to gross just under $2,000 overall on the day. I'll share that with you in just a moment here. But the focus that I want to have at this moment in time is you're in a marketplace that's caught in between a rock and a hard place. You don't have a marketplace that has got clear upside, continued upside potential from catalysts. And we've got an inflation print coming out later in the week, and we're waiting for Q2 earnings. And of course, the peace deal on top of the Fed last week has left the market with a little bit more indecision. Of course, issues that came into the market to absorb a bunch of dollar supply like SpaceX have already happened. So what's next for this market? Well, pattern can inform us. And the pattern that you see on screen right now is one of a coil. We're seeing lower highs in general, higher lows in general, a breakout above the 7605 area. Good. The better breakout would be above 7620 on the S&P E-minis on a daily bar basis. That kind of a breakout opens the door for a rise back up towards the all-time highs made on the U contract on the 2nd of June. So 7620 is the gateway. There's obviously resistive structures starting at 75.55, 60 area, 75.80. It's the top lip of the balance area for the weekly pivot ranges. We've got another node here at 75.93, another node at 76.05, and another one at 76.20. So you've got some granularity on details on where the long above lines are. What about short below? Well, we've got a little lip of volume profile support at 75.24. We're about 15, 16 handles above there right now, below 75.24. The next support would be down in the 74.90-ish area. And then below that, we've got a springboard, which is really where the most contracts have exchanged hands since the 1st of May. Since the 1st of May, you can go pull that across the screen there, and you can see it's sitting in that 74, 72, 73-ish area. Now, if that breaks, obviously lots of downside risk, but this should act like a springboard if we do indeed come down and test it as one. Now, market dynamics overall, in terms of the things that are tethered, the market is tethered to, how are they set up at this stage? Well, the euro's down on the day. It's not yet below the lows that we saw on light futures trade on the 19th, but certainly lower than where we closed on the 18th. The euro is currently down just shy of 0.4%. That means the dollar is stronger. Now, is that spooking precious metals? It's certainly taken some of the shine off of precious metals, that's to be sure. Silver was up considerably more earlier in the session when the euro was trying to get off the mat. It is certainly down from its lows, but it's up about 0.9% vis-a-vis light futures trade on Friday. If we take a look at gold, it's currently up about almost 0.9% as well, with some opportunity to carry on higher. But this is not a clean or clear enough market at near these all-time highs to speculate on turns. I'd rather see the turn in play, see price action get above the neckline of theoretical double bottom here, getting above that 4,400-ish area, and then looking for more upside from there on after. And that would be on gold. Of course, silver has its own respective levels. Overall, I think that we're in a marketplace that is trying to be lifted by the NASDAQ. At this moment in time, that struggle has not been successful. The NASDAQ is down 0.25% at this point in the day, and the S&P is down pretty much the same. So as you break these charts down into smaller increments here, you can see that we were dealing with a market that had some upward potential, but then had a dramatic fall from about the 10 a.m. Eastern time marker, and now is deciding whether or not this is to be consolidation before it continues lower, or if this is effectively a bottoming process in and around the area where we've seen some bottoms play out in the very recent past, going back to really the tail end of last week. It's a little cleaner to look at on the NQ. We were in an uptrend channel. We were rising off of the lows just before 8 a.m. Eastern time. Precipitous fall broke that statistical channel, and very similar to the ES, it's either trying to base at this moment in time, find support and turn itself around, or it is just a pause before the next leg down. Either way, I don't think that today is going to be a market breakdown day. I don't think it's going to be a market breakout day. I would be more optimistic about rises in price above 75.80 and 76.20 on the ES, and with respect to the NQ, more optimistic about rises above 30,630, 30,680, and then of course all the way up here in the 30,820 area. Anything on the NQ below 30,400 spells out more trouble. I hope that these levels helped you with your decision making on the balance of the day and into tomorrow. Here's some of that result from today's trading. Traded 3 of my Apex accounts, a couple of my FFF accounts, and was able to gross about just over $1,970 on small size trades overall. What is the technical setup telling us right now? Well, let's go to the primary market to really adjudicate this. The daily chart's losing its buy signal, but it's still there. It's just cooled off. 4-hour chart's in a sell signal. Hourly chart's in a sell signal. 5-minute and 1-minute chart are in a sell signal. This does spell out some downside risk that could see the market come down and test the upper half of the daily charts MSR channel, the very top of that being in the 74 mid to low 70 area. And if you remember from earlier in this video, that's that area that can actually act like a springboard. It's the VPOC going back to the very beginning of May, and it sits in that 74, 73-ish area. Coming down to it should act like a springboard effectively. And again, it would be the upper end of the MSR channel on the daily chart that we'd be testing, which tends to act like a springboard. We could fall through and come down and test the center. It really is only the lower half of the MSR channel where it's like a fly trap and things can get stuck and down we can go. So right now, I don't want to be optimistic, pessimistic, just realistic. I don't want to be a bull. I don't want to be a bear. We just need to see what's there. It's a weakened buy signal on a daily chart, sell signals on a 4-hour and 1-hour chart without aggressive behavior, with some risk from 75.35 down to potentially the 74.75-ish area before we could see the next bounce. Of course, keep your head on a swivel and make sure that you're looking closely at those key levels as you move through the market day and even this market week. I look forward to sharing more insight with you as you move through this week in videos just like these. I hope this one found you well. Thank you for watching, and we'll see you on the flip side. Have a great rest of your trading day.